Alright, trying to make it a super short video talking about just the actionable steps and the concrete concepts that I use every single session, and then just very specifically what I do to be action oriented. So I look at stock selection, volume, and auction behavior, and then the actual process of trades. So we'll jump straight into it. Scanning, I use a 1 month, 3 month, 1 year, one most active. You can see the criteria right there. It'll always be sorted by price and volume, or like dollar volume, and then I'll scroll through them through here. Tradability, I want my stocks to be very tradable, ideally. So stocks that just surf these moving averages and move up very quickly and very rarely pull back. These are going to be the best. The riskier ones are going to be the ones that have long periods of consolidation and a move up. This can just be a little bit riskier. And then untradeable are going to be if it's way too choppy and doesn't really have a clear cut when it's running or when it's consolidating. It can also be if it's too thin, or it can be if it has a history of gapping down. I'm just not interested in that. The macro environment, you want to stay aware of what groups and sectors are the strongest in the market at the current time, or what areas are lagging, what are consolidating, and you can do that through sector and group ETFs. So here's a huge list of them. I'll also provide the TradingView watch list in the description if that's a little bit easier. And then I'm looking at like market breadth, a couple other things, but staying aware of the larger picture can be helpful. And then, so as far as once you've looked at an individual stock, you're looking for that final positive change of character is what I would refer to that as. So as the stock is moving, I want to see it holding moving average, or as the stock is consolidating, I want to see it holding moving averages or VWAP. I want to see it start to create higher lows, positive changes in action, break of consolidation, retest and downside weakness. Those are sort of the 5 things that I want to see. And that's just like a general framework. Like, this is not something that's like down to a science, but this is sort of what should happen. And so this is on the hourly. You can look at this. We bounce off that 21, bounce off that 21. We've just broken under VWAP, so we should expect a little bit of support to come in. We've started to make these higher lows down here. We're consolidating. We're going to see that change of character in here as we consolidate, because we haven't done this yet. Consolidate, break to the upside, downside. We test it a little bit, move up. And so I'll give some examples here. This is what good basing looks like. And then so volume tools, use the anchored VWAP and the volume profile fixed. So this is going to give us, VWAP gives us the average weighted price from a set point. So if there's super high volume from either like earnings or really anything, I'm going to assume that it's institutions just because of the stocks that we're looking at. And so if a bunch of institutions bought it this day, this VWAP line is going to be sort of representing where their position may be, which means that they're going to be willing to come up and support that a little bit. If it's a good stock, you can be expecting a little bit of support at levels under VWAP or right at VWAP. And then especially if a stock has been holding under VWAP for a minute, when they pop up, it can be really explosive because large institutions are flipping their short positions. Fixed range volume profile gives us the volume traded as a histogram, which means that you can, the way that I usually do this is from the beginning of a move, so it would be down here up to the peak, or down here up to the present day. It's going to give you the volume at each of those price ranges, and so you'll get high and low volume nodes, which are going to be areas where price just sort of steeply drops off and steeply drop off. Generally speaking, the way that I think about it is areas with a high volume are going to be price agreement, and then down here is where it should be really reactive, and then price agreement, reactive, etc. So when you're looking at one of these nodes, it's going to be like a box almost, and this top, there's going to be a top right here and a bottom. So I'll refer to that a little bit later. Risk management and application. Stop loss placement is going to be probably the most important thing here. I'm much more concerned with getting a perfect stop than I am a perfect entry. I can be wrong in the timing, but as long as I have a really good stop, it doesn't matter. That's sort of where the edge in this comes from. So I'm trying to give the stock the appropriate amount of room to breathe. And it's very common for these low volume nodes to be around half or whole dollar areas. So when I'm looking for this, I'm looking to see the bottom of a low volume node. So bottom as in like down here. A bottom, if this was at like $10.50 or like $10 exactly, it would be a really, really good stop to have it at like $9.99. That would be a fantastic stop loss. And you would end up with a situation like LITE here, which hit almost to the penny. And then you can really load up a position there. So, and for this volume profile, it was actually from just the top here. You could have made this prediction based off of just this. So, trailing and optimizing as the stock moves up, I'm doing the exact same thing. I'm trying to identify the lowest volume node that is applicable and the most respectable one based off of the half and whole dollar thing. And so routine and timing. Saturdays, I'm really just checking breadth, looking for ETFs that are good. I check my stop losses, and then I clean out my flagged lists. I clean out all my watch lists. Sunday, I'm going through all my scans. I'm making my watch lists. I'm building candidates, and I try and get like 5 to 10 candidates I'm looking at every morning, and then a main list of stuff that bounces often. And then so on weekdays, I'm looking at the economic calendar, reading Yahoo Finance if an important headline comes out, listening to alerts, placing trades. So yeah, and then my buying is very, very simple. So an alert would go off in an area of interest, whether that be I'm setting alerts for super strong, like lower high volume nodes within a consolidation. And then I'll open the chart, identify if I want to place my stop. I'll just measure the length, and then I'll open Fidelity, and this is sort of the numbers that I'm using. If like the general rule of thumb, like if my account's $11,000, I'm not gonna risk more than 1%, so 100. So that's sort of where this comes from. My selling, I just let my stops get hit, like dead ass. I rarely ever exit a position early. I've seen this happen too many times where a stock will stop like 2 cents before my stop, like it just over and over and over again. And then data collection and consistency. I'm always an advocate for this. Track your transactions, track your statistics, create graphs, be curious. That's the name of the game, and that's really it.